traders, welcome to the TMT stock market strategy video for Monday, March 7th. Well, we got that non-farm payroll numbers that came out better than expected, real strong number. And the markets like that. They rallied pretty much most of the day until right around the end of the trading day, 3:30. We had a nasty reversal and gave back a lot of the gains for the day. So where do we go from here? Well, we are overbought. We're extremely overbought, running into some heavy resistance. Does the market move up another leg, or does the market start to roll back down and starts this bear market that we are anticipating? Well, still a little too early to tell, but I will tell you, you need to use caution here. We are at extremes in the McClellan oscillator. Now, that does not mean that this is not a bullish reading, but when you're looking at something like this at these levels, you want to stay away from buying or adding to any new position in the markets, okay? Day trading is a little different, but if you're a swing trader or you want to swing for the day, you got to be careful. This is something that is, when I see something like this, that's a warning sign for me that we're going to be looking to vacate the premises, if you will, meaning that volatility will be picking back up again. Right now, we have virtually no volatility. VIX got collapsed the last 3 weeks of trading because the markets rallied. But again, guys, is this just a dead cat bounce in a bear market, or is the start of a new market? And that's really the two questions that need to be asked. And price is the only one that's going to tell us that, all right? So that's why we need to use caution. Stocks above the 50-day moving average in the S&P, dramatic, 83%. Every time you get up to these areas, as you can see, we start to sell off. So this is something that I personally am looking for. I mentioned on Friday, the fireworks are about to begin, and I do believe so. Either we're going to have a violent move to the upside and get all the shorts start to scramble, or we're going to have a big push back to the downside, okay? I really don't think anything has changed why the market would rally back up to new highs. Here's another reason why I'm a little worried. I have the GLD, which is the gold ETF, that just went literally parabolic here. Well, if we're in a bull market and markets are really good and healthy again, why is the GLD moving higher? Yeah, I understand at one point it gets to be an oversold bounce, but this is something a little bit more than just an oversold bounce to me. I still think that there's fear, and the fear trade is on by market participants looking to buy GLD and utilities. Utilities come into a seasonal weakness time of the year, which they have been, but what's going on with this? This is not a good sign either, guys. Major, major support, as you can see. I wanted to show that to you here. And now we're looking to take out these highs already. This should not be happening if we have a healthy market, is what I'm saying. So there's a lot of warning signs out there. I would use some caution. Let's get right into the index. As you can see here, we are at big bearish rising wedge. Only bearish if we break that lower trend line, but bearish rising wedge. And into these areas where a lot of traders and hedgies and money managers are caught long, thinking that this market was going to go higher back at the end of 2015, hasn't done so. And now we're approaching a 200-day moving average along with this huge horizontal area of resistance. So that means that we need to either break back out and do something like this. And this is what I would look for. And then make that higher low from this previous low and then start to move higher. That's a whole different story. Then we got something else. We got new buying coming in above these levels, and we'll probably end up taking out this high. Okay, now, if that does not happen, we should fail, and we should, even if we were to get up a little bit, break above it, and then fail miserably, that's when I think that you'll start making these lower lows and lower highs. Somewhere in here, I don't think we'd take out the low. That's way too far. But I do think we make a higher low and then start to go back up again into the spring months. Remember, I mentioned many times, March and April, back-to-back months of positive gains, strong gains for the year. So if we can get a seasonal build in inventories, at one time we had a peak, and I mentioned that many times as well, sometime between March and April, and then oil can stabilize, and I do think that you'll have a bottom in the market for sure. As of right now, we don't know. It's still too early to tell. I think that you're going to see one big scary push lower in oil and again in equities, and that's the moment that you start looking to buy. So you need to obviously make your watch list of stocks that you like. 60-minute spiders, again, big bearish rising wedge, couple of two small little areas of gaps that we have not filled yet, so keep an eye on that. All right, nice big bearish rising wedge into the big area of resistance. Just want to show that to you in a shorter term time frame. You can see what I'm talking about here. Now we have the IWM. And here's another thing too, Russell, right? All garbage. All of these garbage stocks in the Russell, and I don't mean the whole index, but you have a lot of these stocks that are just, basically pure speculative plays. are moving and moving much higher. They've doubled. That's another big problem for me. You have to watch that. Be very cautious, guys. All right, what do you got here? Another big bearish rising wedge. So got to be careful going into this area of resistance. And when you have all of the small cap, garbage stocks start to rally at the end of a rally, that tells me that the rally is at its end. Okay, so just use caution when I tell you that. Be careful. Don't be looking to buy IWM stocks that are in the IWM actually when it already made its high, because it would more than likely revert back down again. All right, transports had a real good run here, definitely in an oversold state, and we had a big uptrend. I like these small candles, and now we're approaching heavy resistance again. So if Russell starts to move, transports start to move lower, that's going to be another sign that we are now breaking back down again, okay? So please be careful out there. All right, lastly is the Qs. Now, the Qs have been interesting, right? I mentioned this last week. Looks like here a small bull flag, but if I take this away, just to move it out of the way, we've had 3 days of just inside days. Really not much movement at all here, okay? Maybe a small bull flag, but you got to be careful here. This index lagged the other four all last week. There was a couple of very large prints caught on our dark pool internals of a lot of the momentum stocks, Amazon, Google, worth north of like $27 billion plus. That's a lot of money. We don't know which way, because it closed. The print was on. You don't know if it's a buy or a sell. You got to be careful here, because if it is a buy, then of course, then we think the Qs are going to explode higher, because a lot of the dark pools have accumulated orders lower. Or if this is a sell order, then obviously we're looking for lower prices. We don't know that yet. So this is very weird what's going on in the Qs, because they have not moved. If anything, they had relative weakness to the other indices. So just a word of caution: if you're trading technology, there's something going out. There's something brewing in technology. We just don't know what it is yet at the moment. So I am watching it real closely and see if we can pick up some clues for this week. But I definitely think that fireworks are upon us this week, guys. Have a great day. Be careful. Use your stops. We'll talk to you tomorrow. Take care, everybody.